Oh boy, what stocks am I buying or planning on selling? We are talking public account here today. I haven't talked about public account here in a few months, and I thought let's go ahead, show everything across the board in regards to public account. What I'm up on, what I'm down on, positions that are doing really well, positions that are doing absolutely horrible. We're going to go through it all in this video here today. I'm going to disclose what stocks I'm planning on buying more shares of, what stocks I'm planning on selling, maybe some new potential addition ads, a lot to go through in today's video. So I took a while to prep this one. So I appreciate everybody being here as always. And let's just jump straight into it, folks. Yeah, I appreciate everybody that subscribed to the channel. Hope you enjoyed today's video. Let me know if you do. And also, if you're looking to apply to join my private group, check out the pinned comment down there. You can fill out an application. We can see if you're a good fit to join us in there. Okay. Alrighty. So starting off here at the top, Elf on a Shelf. It's my best stock, certainly, of the last several years. It's done absolutely tremendous. By the way, the public account started this about probably almost 6 years ago now or so in regards to public account. So we've been just kind of rolling it. Right now, we're sitting at about $1.7 million on this portfolio overall. The Elf on the Shelf's been extraordinary. I used to own a lot more shares of Elf in this account than what I own currently, and I regret every single share I've ever sold of Elf. Every single last share. I took a ton of profits in Elf, but the amount of profit I could have taken if I just held through, oh my gosh, it would have been ridiculous. So nonetheless, folks, Elf on the Shelf's done tremendous for us. Now, overall, in terms of buying and selling, this is a tough one because the stock's done tremendous. 252% obviously in the past year. That's intimidating to buy a stock up that much. But honestly, whatever stock's up or down in the past year is irrelevant. It all really comes down to valuation. Now, you're going to see for all these stocks, PE, this is basically based upon what 2023 numbers are expected to be, okay, in terms of PE ratios, not next year, not 2024. So Elf on the Shelf's trading at about 57 times what 2023 expected numbers are. You know, that's very rich, but the company's had ridiculous growth rates. I mean, the company's been putting up quarters where they're growing 70, 80, 90%, like insane, right? I can't really buy more shares of Elf right now just because I'm uncertain about if these growth rates are sustainable, to be honest. Like, they've been putting up such insane numbers. On the flip side, am I planning on selling my Elf shares and taking my 1,700% gain and running out of this one? No. At the end of the day, when you have a stock that you've regretted selling every single share and the company just executes better and better and better than you ever anticipated, I thought Elf would be a stock I'd probably double my money, maybe triple my money on, not like 17x my money or so. Like, that's ridiculous, right? So nonetheless, I can't sell Elf, okay? Alrighty, next stock up here, you guys might know this one. It is Tesla Maesla. So Tesla Maesla has done us absolutely tremendous. We're up 969% on that one, up $380,000, right? This is the second biggest position in the portfolio overall, right? Tesla, let's call it the way it is. They're going through a very tough time short term. And when I take tough time short term, it's just their growth rates are held back, okay? Not a tough time as in like other tough times other companies have to go through where their revenues are going down and like, you know, their business is a complete disaster. For Tesla, all it is a story of margins are getting hit short term. They've had to do a lot of price adjustments and interest rates are working against them in a massive way, right? So Tesla's still a phenomenal volume grower, still a phenomenal revenue grower, right? But in the short term, margins are getting hit, profitability is going to get hit. We all know that, right? So you have to kind of take Tesla apart from what's going on short term versus what's going on long term with EVs, the EV revolution, obviously, the electric charging supercharger network, obviously on the AI side when it comes to self-driving vehicles, and Tesla's just in front of all those major technology shifts right now, right? Now, in regards to Tesla, am I planning on selling, buying the stock? So in regards to Tesla, I can't buy the stock right now. The stock trades at about a 72 times this year's numbers, 2023, right? And at the beginning of this year, I actually was buying Tesla stock, but that was when the stock was less than half of its current price, right? So I was buying it based upon like 30-ish or 30-something this year's numbers, basically, right? Well, that's very, very attractive. At 72 times this year's numbers, I'm a little more wary of that, right? And so I'm very well aware of several different things that are holding Tesla back in the short term we obviously talked about. I also am actually concerned about the robotaxi network. A lot of people are predicting that's going to be a huge profit generator right from the go. I'm not so sure of that. I think that could actually be a holdback for the first couple of years of ramping that. Very rarely you can ever launch a business and right away it's making money. I wouldn't be surprised if Tesla loses money initially from the robotaxi fleet as they get that out there, whenever that happens, right? Which they're going to have to go through major legal processes across many different states and cities and countries if they want to have it in multi-countries, right? So when I look at Tesla, very certain about the long term of Tesla and confident. I'm a little more concerned about the short term in regards to Tesla, right? And when you have a lot of concerns for the next year or two, and the company's trading at 72 times this year's numbers, right? It's not the most attractive buying opportunity out there. If Tesla, once again, was trading at 20 or 30 times, it's a whole different ballgame, right? And that's what Tesla was trading at the beginning of this year. So the risk-reward profile in Tesla is just not nearly as attractive now as it was at the beginning of this year. And that's something we're obviously having to deal with. The one really, really exciting positive in the short term, well, there's really two. One is Model 3 refresh, right? That's exciting short term. We'll see what that produces for numbers, but it's exciting. And the other exciting thing is Cybertruck, okay? So, yeah, Tesla, always a difficult one to kind of value this company and try to figure out, like, is it a good deal, bad deal, an okay deal, things like that. And right now, there's a lot of stocks tugging at me right now to buy them, right? And so when I'm up so heavily on Tesla and the valuation's like, kind of where I'm at with Tesla. Now, on the flip side, if you haven't built a position, Tesla, I could understand folks buying it out there, okay? Alrighty, third stock up here of this bunch is Meta. So Meta, we're up about 145% on this one, up $325,000. And this is the biggest position in the portfolio, even bigger than good old Tesla math. So this is $548,000 position versus $419,000 position for Tesla. Now, in regards to Meta, okay, is Meta stock a buy? Okay, yes, absolutely, Meta stock's a buy. Here's what's going on with Meta stock. Now, am I personally going to be buying it? Probably not, because it is already such a large position. I'm already so overweight Meta. That's a problem with me in Meta and Tesla, to be honest. I'm overweight these stocks heavily right now. 31% of my portfolio is in Meta, 24% is in Tesla. Now, do keep in mind, it's not like I put 31% of my portfolio in Meta and 24% Tesla. The stocks have gone up so damn much that they became such heavy weights in the portfolio, right? I'm up $380,000. Like, my cost base is like $23,000 or $39,000. I mean, excuse me, is like $39,000 in regards to Tesla, right? So yeah, cost base is $39,000, and we're up $380,000. And when it comes to Meta, cost base is a little over $200, and we're up over $300 on the stock. That's how those became such large positions. So I can't really add Meta, but the stock is still a buy, actually, and I understand it's had a great year. It's irrelevant. Whatever's happened in the past year for the stock price is irrelevant. The bottom line is with Meta, it's trading at 22 times this year's expected numbers, right, 2023. And we're talking about one of the best balance sheet companies in the world. We're talking about Zuckerberg that's got the team very focused. They're going to run lean and mean for the next several years. And we're talking about when you own FB Messenger, IG, and WhatsApp, you got a very bright future in front of yourself, right? Plus the metaverse opportunity. I'm really excited about, Oculus 3 and, MetaQuest 3, whatever we want to call it, and whatever that produces for numbers. I'm looking forward to getting my hands on that and trying out that product. I think it has huge potential. So when it comes to Meta, the stock is still a buy. I won't be buying it. Hard decision, but it's 31% of my portfolio. So I've got to watch, because at the end of the day, you never know what could happen, right? And you've got to watch your risk levels when a position's already too big in your portfolio overall. So yeah, Meta, love that one. All right, next one up here, the fourth stock of the portfolio. Will I be buying or selling it? It is Palantir. So Palantir, one of the most controversial stocks in the stock market nonetheless. Yeah, definitely one of the most controversial stocks. People have strong opinions on Palantir. Bullish, bearish. It seems like, man, I don't know. It's just Palantir is one of those stocks that gets the people going. And in regards to Palantir, it's certainly doing us very well so far. We're up 73% on this one, up about $36,000. It makes up about 5% of the portfolio in general, right? Now, you know what's interesting about Palantir is we're dealing with a company that has obviously a great relationship with government, right? We're dealing with a company that has massive expansion into commercial. We're dealing with a company that has huge potential in the AI space. I've talked about Palantir for the last several years in terms of being the perfect company that's at the cross sections of data and artificial intelligence, right? And helping your company, government, whatever, make much better decisions than if you didn't have Palantir. And whatever you spend on Palantir, it's going to yield you much more than that. So if you spend $25 million a year on Palantir, it should yield you way more than $25 million in cost savings or helping generate better business decisions for more revenue opportunities, whatever it is, okay? So when it comes to Palantir, it's such a controversial stock because some would say it's very overvalued, some say it's, very undervalued, okay? And you're talking about a company that's trading at about 66 times this year's 2023 numbers, right? Which looks expensive. And then you add on top of it the fact that the stock price has gone up over 100% this year, and people say, oh, Palantir is overvalued. What I'm here to tell you today is Palantir is not overvalued, actually. We're talking about a company that's just hitting profitability. They're at infant stage. This is inning one of profitability for Palantir. The profitability this company should produce 3 years out, 5 years out, 7 years out is going to make today's numbers look like a complete joke. Like, oh, that was so cute when we were at infant stage of profitability, right? The company's just learning how to walk when it comes to profitability, okay? We still got to run and sprint ahead. And so when it comes to Palantir, it looks expensive when you first view it, and then you start to dig in a little deeper and you start to run some projections on what net income can be several years out, and you realize it's not nearly as expensive as it might seem. And then you add on top of that one of the best balance sheets, certainly, in all of the world, right? And then the AI opportunities there. So, yeah, Palantir. Now, am I going to be buying Palantir stock? And the answer to that is potentially. Potentially. It's not like a for sure buy for me because I already have a pretty good position size in it. 85K is pretty appropriate. I mean, I can see myself maybe getting up to $100,000 in this portfolio. Am I planning on selling Palantir? Absolutely not. I mean, when you got a company in this space that has the opportunity this company has over the next, 5+ years, if not 10+ years, yeah, I'm not interested in selling this one anytime soon. So Palantir is just a long-term hold for me. All right, next stock up here. What is it? Is it amazing? Is it an amazing stock? Let's see if it's an amazing stock or not. No, it's not amazing stock yet. We might get to an amazing stock in a minute. Skyworks Solutions. We're up about 31% on the stock, up about $16,000. Now, do keep in mind, this doesn't account for any dividends received from any of these stocks, which obviously Skyworks is a dividend payer. So we've made much more than that over the years of holding the stock, right? But when it comes to Skyworks, they're in a bad place short term. There's no doubt about it, okay? There's a reason the stock hasn't moved in a year, basically. No, the company trades relatively cheap. It trades at about 11 times this year's numbers. It does have a dividend yield of nearly 3%. But the problem with Skyworks is they get about, it's usually anywhere between 40 and 50% of their revenue from Apple. Here's the deal with Apple. iPhone revenues have been going down. Volumes have been going down. I wouldn't be surprised at all if iPhone volume's down again in 2024. So for Skyworks, it's, volume's everything for them, right? They only have so much content they can sell into an iPhone. Maybe it's $20, $25, $30 worth of content. So at the end of the day, it's all about volume. That's how they push up their numbers, right? Now, Skyworks has many other customers, keep in mind, outside of Apple, but Apple's such a significant customer for them. So if iPhone volumes aren't very exciting over this next, let's just say 12 months, it's going to be a holdback for Skyworks overall, okay? So this is something to kind of keep in mind here. Also, there's a few competitors in regards to Skyworks, but the problem is these companies usually work so close together, it's hard to just rip and replace for a company like Skyworks. Same thing with Cirrus Logic, ticker symbol Cruise. It's a stock I owned in the past, done me tremendous. That's another semiconductor company that's really in the audio space. When it comes to Apple, these companies usually work close together. So they're seen as like, oh, you could just rip these out, throw another chip supplier in there. It doesn't really work like that, especially when you got to understand, Apple's working on iPhones 2 and 3 years before they ever come out. This iPhone that's about to be shown off and come out, this iPhone's been in the works for quite a while now at this point in time, okay? At least a couple years. And so that's something to kind of take into account in regards to Apple, Skyworks, and all these different companies in general. So balance sheet's phenomenal at this company, phenomenal management team. It's just not the most exciting stock in the short term. Now, with that being said, would I be a buyer of Skyworks Solutions? And the answer to that is probably, especially if the stock goes any lower. Let's say Apple gets hit hard over this next 6 months or whatever, right? A lot of people are like, oh, iPhone 15 is not going to move volumes, revenue is going to be down next year, profitability is going to be down for Apple, blah, blah, blah. Okay, let's say Skyworks goes to the 80s. I'll likely be picking up shares of Skyworks, especially if for any reason this position went negative into the red. Definitely a pickup for me. There's always a potential that Apple could want to replace Skyworks with their own chips and try to do their own thing. But you got to understand there's so many patents that go into that. They could end up in a legal mess. Many times it doesn't make sense for Apple to do something like that. So Skyworks Solutions, great company, not in a great spot short term. Okay, and I might be buying it if the stock was to go down a bunch in the short term. Alrighty, folks, next stock up here. Maybe this one's an amazing stock. Let's see. And it is Amazing Zon. All right. So Amazing Zon, somewhat of a newer position for me. I believe I started adding this one the end of last year and then certainly added a lot in early this year. Sitting at about a $145,000 position right now. We're up about $32,000 on this one, up 29% so far. I think it's very small numbers compared to what will be up long term. Now, in regards to Amazon, this is another one that's a little confusing. It's trading at about 63 times this year's expected numbers. I don't think that's accurate. I think Amazon's going to post some way better earnings per share. This current quarter we're in right now, that Amazon should report at the end of October, beginning of November. And I think they're also going to report much better earnings than expected next quarter as well. When I look at the cost-cutting measures they've been doing, and Amazon's just one of those companies that always finds cost synergies. I think revenue is going to be stronger than a lot of folks anticipate. So I actually think the company's trading at about 50 times, 50 to maybe 55 times this year's numbers, okay? Now, with that being said, they're still relatively expensive, right? We're talking about 2 times, 2.5 times the market in general. But you got to understand, when it comes to Amazon, they have so many growth levers all over this company between Amazon, Amazon Web Services, the advertising business, Prime, Whole Foods, Twitch, everything they own there, that I look at Amazon and I see a company that has, 10 plus years of huge revenue growth still ahead and profit growth that will exceed revenue growth overall for Amazon. So obviously with Jassy and the team at Amazon, I absolutely love it. I'm expecting Amazon to be an outperformer of the S&P 500 over the next 5 years, and quite a decent outperformer overall. So it's a tricky one. It looks expensive, but Amazon, you got to understand about Amazon, the stock always trades rich. It's never going to trade cheap. If you're on Amazon for a 15 PE ratio, it's just not happening. I hate to break the news to you, okay? Amazon's, since the first time I ever looked into Amazon, which was probably 2010 maybe or 2011, because I was like, oh man, this Amazon company, I think they're going to be huge with e-commerce and everybody. I could picture everybody ordering packages in the future and all this stuff that obviously ended up playing out. But I remember I looked into Amazon, I couldn't even buy it back in 2010, 2011 because it traded rich, and I'm like, I can't pay that sort of PE ratio for Amazon. That seems crazy. Yeah, that was before I really knew how to value growth stocks overall. So Amazon, I probably not. Will I buy it? I'll probably not buy any more shares. I'm pretty happy with the shares I have. If the stock was to go down a bunch and next thing you know, it's under my cost basis for any reason, we had some sort of stock market crash, sure, I'll buy Amazon then. But I've built the position out. I'm happy with what I got. I got 145K in this one. And so I'm just kind of feeling like let it run in regards to Amazon. Okay, that's Amazing Zon for you. So next stock up here is Corsair Gaming, CRSR. Corsair Gaming, about $46,000 in this one. It's about a 2.67% position for me. Corsair, if anything, I've been a little bit of a net seller of this stock over the past few months. With that being said, I'm not planning on selling any more Corsair in the short term. And here's the deal with Corsair, okay? It's trading about 25 times this year's numbers, which is a little rich for a company like them that's more of a hardware electronic company, right? But based upon next year's numbers, we're talking about this is probably trading at, depends upon where you got your EPS numbers, I'm thinking between about a 15 and 18, which is pretty fair for a company in the hardware space like a Corsair Gaming. So overall, I look at Corsair Gaming and I see a company that I don't really want to sell any more shares of, but at the same time, the stock's not really trading at a range that I necessarily want to buy more right now, right? So for me, it's actually kind of just a hold right now. Now, with that being said, if the stock went down a bunch, I'd be buying more shares. If the stock went up a ton, like let's say it's also trading at $25, $27, I might be a net seller of Corsair overall in regards to this one. It just hasn't had as much of a growth profile as we might have hoped, right? Next stock up here is RVLV, which is an e-commerce company, really in the clothing space. And basically, the stock is at nothing for us right now. We can just call it basically break even, right? In regards to RVLV, it makes up about 2% of the portfolio overall. I have about 3,000 shares here. I like RVLV. Will I be buying the stock? Yes, likely I will be. It trades about 27 times this year's numbers. Next year should be a much better year for the company overall. And especially when it comes to profitability, I don't know if it's going to be the most exciting revenue year for the company next year, but definitely expecting nice profitable growth in terms of the bottom line next year with some adjustments they're going to make, because obviously the revenues have come in lighter than they expected. And there's kind of like a divergence between when you have revenues that aren't quite expecting, what you're expecting as far as management goes. Usually it's going to hit your profitability much more. Then you're going to play more conservative. Maybe you do some job cuts, some hour cuts, things like that. Next thing you know, you're finding some cost synergies and your profit growth can be in a nice place, even if your revenue growth isn't at that particular time. Big short interest on this one, which I just think is interesting overall in regards to RVLV. So I love the management team here. Love the business model. I will likely be buying this stock, especially if it goes any lower, okay? That's RVLV. Next one up here is actually a hedge play, okay? And that is Polaris. I've got some put options on Polaris that are going to expire at basically the end of 2024. They expire December 20th, 2024. This is a hedge. So a hedge meaning essentially protection from our portfolio. So the way I always, think about this is what happens if the stock market goes down? What happens if we have a crash? What happens if we have a major recession, right? I need to have protection in case any of those downside scenarios happen. And a little hedging can go a long way if done properly in the market, in case you do have some sort of tanking stock situation, right? Polaris is a company that I think is a perfect hedge. This is a company that's already starting to be hit by interest rates, right? Obviously, when it comes to loans, it's gotten much more expensive. And a lot of people buy these off-road vehicles and the snowmobiles and all the different stuff they sell on loans, right? You're not going to usually pay $15,000, $20,000, $30,000 cash for these. A lot of people buy them on loans. So they're already kind of being negatively affected by what the Federal Reserve has done, obviously. But the other way I kind of think about this is if we have any sort of major recession where unemployment goes up in a major way and the masses get very concerned about their financial matters, they're not going to be selling units, man. They're not going to be selling units. The only reason this company's put up such amazing numbers over the past few years is because we had all the stimulus money. People felt pretty good about their financial futures for a while there. But a lot of that's changed, obviously, very recently, right? And we're at a situation where, employment doesn't get better than this. We're at 3% something, unemployment rate. It doesn't get better. So at the end of the day, when it comes to employment picture, it only stays the same or it gets worse. That's all that happens. And so if we also go to 4%, 5%, 6%, 7% unemployment, Polaris' business model is going to get hit in a major way. What the heck was that? That flew on me. It's going to get hit in a major way. I don't know what kind of bug that was, man. What are you trying to do get in my mouth, man? But anyways, Polaris. That's one of my hedge plays overall, okay? Alrighty, next one up here is cake. I love cake. I love cake. And I'm talking about real cake and I'm talking about cheesecake, okay? Cheesecake Factory. So this one overall, somewhat newer position to the public count. It makes up a little less than 2% of the portfolio in total. In terms of cake, am I buying the stock, selling the stock? The answer is absolutely I'm buying the stock, okay? We're talking about a company that's trading at about 11 times this year's numbers, about 9 times next year's expected numbers. Dividend yield of 3.5% on this one. Between the Cheesecake brand, North Italia, what they're doing with Flower Child, and the rest of the FRC concepts, there's no doubt in my mind that cake's just a great long-term buy. It's a stock I plan on adding a lot of shares to over the next 6-12 months. Regardless if there was a recession, no recession, anything like that, it doesn't matter to me. I'll be a buyer of cake overall for the next 6-12 months. Absolutely love that one. Next one up here is another hedge play, and that is Toll Brothers. I do have some Toll Brothers put options here, okay? These are $75 strikes, and they expire January of 2025. It makes up a little less than 1% of the portfolio here in regards to these toll puts. Now, In regards to these toll put options, right, making up 0.3% of the portfolio, the way I kind of think about this is housing's been red hot, new housing for years. It really has. The numbers have been tremendous for years. I am of the belief that we are actually overbuilt right now. And I am also of the belief that these home builder numbers would be horrible if interest rates weren't so high and people weren't just sitting on their homes. So at some point, something's going to break. Interest rates, the economy, I don't know, but something's going to break and it's going to hurt a company like Toll Brothers in a very significant way. And inventory is going to go out there and it's going to pile up, and next thing you know, prices will drop and the market will correct, right? And so when I look at a Toll Brothers, I mean, we're talking about a company that's selling homes usually $1 million plus. I think if there's any sort of recession scenario, I think Toll Brothers is going to get hit very hard. And yeah, overall, I'm definitely not, I think there's a big risk to Toll Brothers. And the stock's been trading recently at about an all-time high, right around an all-time high here recently. So Toll Brothers, yeah, hedged on that one. Next stock up here is PayPal, PYPL, the number one stock I've been buying the last several months in the public count, probably the number one stock I'm going to continue to buy in the public count over the next several months. Good old PayPal. So we're down about 10% roughly on PayPal, which is, PayPal's kind of, in my opinion, in a bottoming out formation right now that it's kind of been going through for the last several months. And when it comes to PayPal, here's the deal. 12 times this year's expected numbers. We're trading about, we can call it 10 or 11 times next year's expected numbers in regards to PayPal. Yeah. At the end of the day, PayPal, Venmo, Braintree, Honey, give me shares, okay? In my opinion, PayPal's an easy money stock. It's not one I have to worry about over the next 5 years. Like, oh my gosh, I don't know about my PayPal shares. No, okay? Obviously, the space is very competitive. It's going to remain competitive. That's business. And PayPal's done a great job competing with these guys over the years. I think they're going to do a much better job in the future. I'm very excited about the Intuit CEO. We'll see what happens there. Coming over, obviously, he was a high-level person at Intuit. Intuit's been a phenomenal stock in the market for years. Very well-run business model. And I'm very bullish on PayPal long-term. Next stock up here is CMG puts. Some Chipotle put options, okay? So Chipotle put options, these ones expired in January 2025. $1,500 strike prices on this one. This one I could add more to over time. By the way, I'm going to likely do more puts in October, potentially November, December as well. Polaris, Toll, and CMG are all ones I could potentially add more to. These put options are about 0.4% of the portfolio overall. When it comes to CMG, they've obviously benefited in a substantial way from all the price increases they've done over the years, which they've been able to go up. I mean, it's crazy. Like you have to spend $10, if not more than $10 for a basic Chipotle burrito now. Some of these burritos are, you want to get some guac and some of this cheese sauce and whatever. Next thing you know, you're $15, $17 deep for a Chipotle burrito. It's pretty extraordinary, right? Now, Chipotle's been benefiting from the price increases they did. On top of that, they've been benefiting from 3% unemployment rate, right? If we were to see unemployment go up substantially in any way, there's going to be, in my opinion, a huge cutback on things like Chipotle, right? Which is definitely a leisure expense. Like you don't have to go to Chipotle and spend $10, $15 on a burrito, obviously, right? There's much more affordable options out there. So when I look at Chipotle, it's a great company. It's trading at a bad valuation. We're talking about 45 times this year's number for a Chipotle, for a burrito chain, right? Their best growth days are behind them. And if their comp restaurant sales fall in any significant way, the stock price is going to get crushed like a souffle, as Elon Musk would put it, okay? So overall, I'm not very bullish on Chipotle for at least the next, I would say, 1 to 2 years. We'll see what happens after that. But yeah, that's where I'm at with Chipotle, so I got some put options there. Now, last 3 positions. These are the disasters. These are the bad children, okay? These are the stocks that you kind of think about, should I put these babies up for adoption? These are 3 stocks, okay? These are the worst of the worst. The Planet, Honest, Avant. The stocks have been nothing but a disaster in terms of stock prices, right? Planet's down 53%. Honest down 65%. Avant's down 65%, right? It's been absolutely horrific. Now, one of the great things about stock market investing that gets way overlooked, most you can lose in a stock's 100%, right? Unless you're doing some sort of margin craziness or something crazy, right? The most you can gain is unlimited. This is a part a lot of people don't factor in. They think, oh, if you have a couple bad stocks, a few bad stocks, you're done, man. You're finished. You don't even understand basic level math. If you think that, you don't understand basic level math. I can make 2,000% on a stock, 1,000% on a stock, 500% on a stock, 10,000% on a stock. The most I can lose in a stock, even if I held it all the way to bankruptcy, is 100%, right? That's the beauty with stock market investing that people just miss many times. And I think it's very important to understand that, and then you can understand how return profiles can be changed if you can have some outsized gainers, right? And these sorts of stocks are those big taking risks. These are I'm going for the next ELF. I'm going for that, 500% gain, 1,000% gain, something like that, right? And when it comes to these, they just certainly haven't been that yet. Of these three stocks, the worst one has been Honest, certainly. They've been the worst performer. Planet, it looks like pricing's bottoming. I think Planet's going to be in a pretty good position over the next few years, although they've done some big acquisitions here recently that I'm kind of like waiting to see how that plays out, because I don't know. I don't know what that's going to mean to the bottom line of the company overall, so I'm kind of waiting on that before I buy more shares of Planet. Avon's actually a stock I can buy currently, and the balance sheet has always been in a pretty good place for the company, considering how small the company is, and the income statement's actually been very impressive recently with Avant. So I'm the most impressed of these three stocks with Avant. Least impressed with Honest, although there's a little hope after the last conference call. And then when it comes to Planet, I would call myself kind of medium hope, but those are the three disaster stocks. So, I sold some Honest recently. Will I sell more? I think it really comes down to whatever the company reports in the next earnings. If I like what's going on, if the numbers are improving next quarter, I will likely be if anything, actually potentially a buyer of the stock, or at least continue to hold. If I don't like what I see from Honest in that next quarter, I might sell, and I might take the L on that one. We'll see what happens and plays out there. It's really going to depend on the numbers. Planet, I feel no reason to sell that stock anytime soon. And Avant, same thing. I feel no reason to sell my Avant shares here, which are about 1% of the portfolio, about 163,000 shares. It sounds like a huge amount, but it's only 1% of the portfolio, okay? So, what a beast video that was. I hope you guys enjoyed today's video as always. I appreciate y'all joining me. And I'm looking forward to continuing to build this portfolio. I hope it's, eventually going to be a $3 million portfolio, $5 million, $10 million, and we'll go from there. So, appreciate y'all joining me. If you're looking to apply, join my private group, see the moves I'm making in the market, see exactly how I build a portfolio, learn everything I got up here, get access to my hundreds of videos teaching you everything I know on how to build portfolios, pick stocks, all that good stuff, then check out the pinned comment down there. You can fill out an application. We see if you're a good fit. Join us in there. Get part of the private group's Discord chat with the 6- and 7-figure members and all that good stuff. Much love as always, and have a great day.